Good morning, Chris. How you doing?
Hey, good morning, Brian. I'm good. How's it going with you?
Everything's good. This is Brian Jones. I am here with Chris Hood, professional options trader and world's most interesting man.
Oh man, I'll tell you what, I think that the market's taking all the level of interest out of people at the moment. That's for sure. I think everyone's running.
Yeah, it's not looking really good. I mean,
It's been, I think I think it's the second or third time in history that we've had an 8-week losing streak on the Dow, I think it was. It's just been brutal. There's no other ways to describe it. It's like, selling begets more selling. The amount of stocks that have lost their 200-day moving average, looking at what's happened to Netflix, Tesla, it's crazy stuff out there. Crazy stuff, but lots of opportunity.
I know you're not a fundamentalist, but I mean, what do you see? Is this kind of a sort of a combination of factors? I mean, there's a lot going on right now. There's a war going on. There's like still COVID lockdowns, supply chain problems. There's like a monkeypox virus. I mean, whatever.
Next, man? You know what? To be honest, I'm not as smart as the guys who will opine on these things. The way I see it is, this is all a consequence of printing a lot of money many years ago. Eventually the money has to flush out the system, right? And at some point, if your GDP in terms of real production is not growing and you got more money chasing the same amount of production, you're going to have inflation, right? So inflation is a monetary supply phenomenon. You put more money into the system chasing the same amount of goods, everything has to reach that equilibrium. So I think that this is just a consequence of previously, bad decisions that have been made, and it puts people in a corner. The amount of wealth that has been lost in the last 3 months is huge. It's enormous, right? It's, the amount of money that these companies have shed, the value, I think it's like $3 trillion has been shed just off the NASDAQ in terms of some of these big companies' wealth or value. That's big numbers. And it's affecting people's pension funds and stuff like that. If you were planning to retire this year on your 401k that was invested in the market, good luck to you. That's the pain that you're going to have to feel now. But having said that, from a trader's perspective, this kind of volatility is fantastic. The amount of opportunities that come out this is what we live for, is this kind of volatility. We may not like directionally, and this is a problem for most people. Most people think of up is good, down is bad. But, as traders, you should be agnostic to the direction of the market. It doesn't really matter. You should be making money whether it goes up or down. The speed at which you make money will differ, right? So when you trade to the upside, things tend to grind their way higher. When things go to the short side, or when they fall, they tend to fly. So you have to, balance your trading style with the direction of the market. So if you've been trying to trade slow and steady to the short side, it's a little frustrating. If you're trying to swing for the fences to the, pick a bottom, that's not working. So you have to trade with what the market gives you. So tough seas, this is not easy for a lot of people. You saw what happened with Walmart. Walmart, who would have thought that in a high inflationary time, Walmart would get hammered or Target would get hammered? It's crazy. That's just nuts.
Prices are so high on everything that I think people are just, they're really, really pinching pennies, and they're not even spending money on the cheap crap that you can buy at Walmart.
Yeah. Look, I think the big thing is definitely oil, right? When I see it at the pump, when I go fill up my car, it's getting really expensive. I say to my wife, remember a year or two ago, petrol was half the price, or gas was half the price than it was here. It was under $1 a liter. Now it's, over $2 a liter. So I think the most important thing is you have to be calm. You can't force things. And this is the problem with trading. A lot of traders, particularly novice traders, tend to force ideas into their charts. They tend to see trades that aren't there. This is not a question of, I have to trade. Do not do that. If you sit there and force yourself to see something that isn't there, you will trade the wrong way. You will lose money. Trade what is visible, not what's invisible. Don't force things into the market. If there's a trade setup and you've got tools that tell you that there's a setup, trade that setup. Don't look at your tools and go, well, maybe I think that this is going to go the other way. You know, your tools are unemotional and agnostic. You know, that's the way I use mine. They are there to take away this emotional fear factor that comes into trading. And all of us have it. Every single human being has an emotional component when they trade. So if your tools can mitigate that and take that out, you find that your success rates tend to be a lot better when you trade in that way. So it's tough seas, you know, navigate slowly. Don't try and hit the ball out of the park. You've got to try and, you know, hit singles. This is a market for singles, not home runs. And it's tough for a lot of people. You know, a lot of traders have lost a lot of money over the last 3 months, you know, picking bottoms and, you know, swinging for the fences. It's
well, obviously there has to be a bottom somewhere, you know.
Yeah.
The market's not going to go to zero. But so how long, I was, you know, just from I know you know a lot more about economics than I do, and trading, and a lot more, pretty much everything that has to do with financial stuff, you know, infinitely more than me. But
No.
I have been reading a little bit about how markets tend to go in cycles. You know, you have bull markets and you have bear markets, and the bear markets tend to be shorter than bull markets.
Yeah.
So what is, you know, in your experience, how long do bear markets, since you've been trading, how long do they last?
You know, the thing is, it's not really going to be easy to answer that, because each bear market and each cycle is going to be different, right? So, you know, historically, they may have been so long, X long. This time might be different. The most important thing to do is don't assume that just because it was 6 months last time, it's going to be 6 months this time, all right? Or if it was a year long last time, it's going to be a year long this time. It doesn't work like that. Rather than trying to estimate when by time, because remember, it's the same thing when you start understanding seasonality. Seasonality is not a setup, all right? You can't trade seasonality. What you can trade is seasonality is like a tendency. There's a tendency for stocks to do, you know, worse in summer. It doesn't mean that they have to, all right? It doesn't mean that they have to. So how I look at things is when my tools give me an indication of a reversal, all right? So when there's small green shoots, you know, at the end of winter, the snow starts to melt and you start getting these little green buds on the trees. That's when you know spring is coming, all right? So we need to find the indicators that are going to give us a heads up that there are little green buds starting to form. So when we don't look at the market and go, it's snowing today and we've got 10 feet of snow. The next day, you don't land up waking up and seeing zero snow, right? It gradually melts, and it's that melting process that's really important. So for me, I don't try and put an expectation of time. You know, this could last until end of summer. This could be the whole of summer. We know that summer is a very, very difficult time for the market. People go on holiday. We've got all these external factors that are influencing the market. You know, we just can't tell. I don't think that it's practical to sit back and say this will end by summer. What's practical is to say when the signs of a reversal start to appear. And I'll show you how I'm looking for it. So let's open up my screen and we'll open up a long duration chart. So effectively what we would be looking for, let's have a look. I just want to see. Yeah. So I look at 3 time frames. When I look at the long term, I'm looking at the daily trend. All right. There's the daily. I'm looking at the weekly. All right. So this is the weekly in the middle. And I look at the monthly. All right. Now, how long do I think this is going to last? Let's start first at the monthly. All right. So if we look at the monthly chart, you'll notice this red band that's starting to form at the back of price, right? There was our long trigger. We broke our trend line. Our volatility band has now moved to the downside. And all of our squeezes down here on various lengths and what have you, down here are all pointing down, right? Momentum is to the downside. Stochastic is pointing down, 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 down. You'll notice there, stochastic is red, 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 red. There's nothing on this chart, on this monthly chart, that is bullish by any stretch of the imagination, right? There is no way that someone can come to me and say, you know what, we're at the bottom. You cannot do that now. So we've got lower prices to come. Our levels where we are seeing support, we've got support sitting in this green box here. All right, so we've got long puts on play. We've been trading long puts for a while, and we've got those in. So we've got a profit target level down here at around 370. We think the market's going to come down here. We might just chop around. We could fail there. All right, we could fail at the 370. If we do, we're coming down to this level here at around 340. So once we've got an idea of, you know, the bigger picture, all right, here on this monthly chart, we move now to the weekly, and we say, well, does the weekly chart support the thesis that prices will fall? All right, so this is a key thing. So let's have a look at where the weekly chart is. We have a red volatility band. Okay, so red volatility band for us indicates lower prices or trending to the downside. We've got squeezes that have fired to the short side. So you see that purple triangle that happened here, that was starting yesterday. That's a squeeze firing to the short side here at the top. Now, on our short duration squeeze down here at the bottom, there's a bit of a slingshot. We call this a slingshot. So we got, okay, we could experience for some degree, some upward price movement, but we do not expect it to go higher than the previous week's candle. So we could see this candle going up, we could see it coming down, but effectively we might see it just, you know, chop between 395 and 384. This is probably going to happen for a while. If it breaks this level here, we're coming down to 340. All right, so if it doesn't hold there, we're going to go here. All right, 340, that's over there, right? Inside the expected range of price for a month. Okay, so a fail to this level would not be outside of the realm of acceptance based on the range of the monthly volatility. So we're okay. This would be completely normal and expected. So now what we do is we go to the daily and we go, does the daily chart support what's happening in the weekly? Because the weekly chart is made up of 5 of these candles. All right, that's how we look at it. So if we go to the squeeze and we see the momentum on the squeeze, we can see these slingshots forming here. So on a day-to-day basis, we may see some gaps up, we may see some gaps down. All right, but by and large, by the end of the week, we should be inside this green box, trading somewhere here with this price being slightly lower, right? That's the way we see it. We will not go bullish until a couple of things start to happen. The first one is you need to have your price on the daily higher than the range of price, right? So if our range of price is calculated at 412, we cannot be bullish until we cross 412. We have to be up in this area here. Now you'll notice it's got multiple colors. With those multiple colors, each of them means something. So here we have liquidity. This green box here is liquidity. If we go into the green box and we've got squeezes starting to form to the upside, we could see price moving this way strongly. What that will do is it will push this up, right? Can we get above 430 or 420 on the weekly chart? If this is not red, or if this is green, going blue, it's going to the upside, it's going to be very, very difficult. So the relationship between these 3 charts is what will tell you when things are going to get better, because things are not going to get better until the day chart repairs itself. So the day chart, we've got to close above 412. On the weekly basis, we have to get above 436. That's a long way away from where we are now. And on the monthly, we've got to get back up to 480. So if you think about the extent to which we've fallen, we are not going to be going back into these bullish trends until we break those lines. So we have to wait. We have to see. You're not going to get up to this level of price unless these squeezes of price start to repair themselves and push it to the upside. So one of the easier trades right now is to just trade to the short side. So what we suggest is, start playing your long puts, right? Now, where do you put those long puts? How far out do you go? Which way do you, what level of strike? All of those things are dependent on the theory that you are playing. So if you're trading the monthly, you need to be 6 to 12 months out. If you're trading the weekly, you need to be 60 to 90 days, 3 months out. And if you're trading the daily, you need to be 21 to 45 days out. So each one of these time frames has a specific timeline to how that trend will play out. So, there's a lot of volatility. All right, we can see here on the weekly volatility starting to increase. We've got weakened momentum across the board. I think we're only just getting started, to be honest. I think we've still got a long way to go. I think we will get down to these levels. Now, how long it takes to get there, that's anyone's guess. But the expectation should be, don't expect a rapid recovery, because we are so far below where we need to be. And we don't have anything pushing the price up. We've got too many negative things holding the market down, as opposed to positive things pushing it up. The one thing that I watch a lot on is the 200-day moving average. And if you think about how many stocks have lost the 200-day moving average, remember, institutions don't necessarily go back in and buy those stocks until the 200 is reclaimed. So once the stock breaks the 200, let's have a look at Netflix, because this is probably the most telling out of all of them. If we put up Netflix,
people are getting smashed by all these little uptick green days on the downtrend, because they're focused on the green daily candle, but don't realize that we're in a monthly down and a weekly downtrend and a daily downtrend. Yeah,
this is the biggest problem. People get overly enthusiastic about one candle. One candle does not shift the long-term story, right? We need, in theory, you need around 6 to 8 bars of changed momentum in order to change a trend, right? So you're not going to see a changed trend on one candle. And that's what happened with the SPY. We had that one day where we had that big sell-off and then a massive reversal the next day. Even my signals went long, and the next day it reversed back to the other side. And it's those gaps up, it's those candles where all of a sudden they lose all sense of reality. That's what takes you out of the game. So have a look here at Netflix. If we put the 200-day moving average on, you'll see where the 200 is. Netflix, there's the 200. Does Netflix look like it's going to go up or down? Or is it just going to chop? It's probably going to chop. And at some point, this comes down, it starts doing this. And when the 200-day moving average meets price, I don't know how long that will take. It could be sometime in July, it could be, sometime in August, whatever it is, when this is descending, right? Say it gets down there at the next earnings, we may see Netflix start to recover at the next earnings. We may, I don't know. But this is the gap. And I think it's dangerous to assume that any of this movement down here is positive until that is reached, because until that's reached, no one's interested. I wouldn't trade it. But, would someone else do it? Maybe. You can trade these movements. But this is hard work. If you're a long-term investor, when someone says, oh, buy now, I call it the Bill Ackman theory, because Bill Ackman lost $500 million on this, doing that exact same thing. Where do you want to be with your account? You might not have $500 million, but when signals are telling you do not buy the stock, up here, this is back in the last earnings, January, it broke the 200. Like, why would you buy this? If you calculate how much these smart guys have lost just by doing crazy things, how much money was lost there, and then how much money was lost down here. Don't trade against your system. If your system is proven to work, trade your system. So you have to really realize that once the 200 breaks, that selling creates more selling, creates more selling, creates more selling. It becomes a very, very, very difficult job to get the price back up here. The only way you can do it is to be patient and let that come down to price and let this drift along. And when it meets price, that 200, that will trigger a buy signal for a lot of funds again. So
I was thinking about this, actually. It's sort of like, the market tends to equilibrate a little bit over time, or it reaches some sort of, but then it goes, so it has sort of a overall negative feedback control about holding things. But then there's these little, like the human body, it's like there's these positive feedback systems with the algos, for buying and selling, where it goes crazy and then it steadies out.
So one of the things that I've been working on is building these yellow boxes, because these yellow boxes are where these algos start to play a lot more in the market, right? So where these yellow lines are, prices above those yellow lines become bullish, and prices below the yellow lines are bearish. And we're just not hitting any yellow lines. It's just, those algos are not going in and buying anything. So, one of the ways that you can really follow, the market is just always keep your eye on key levels, right? There's the 200 for the SPY, right? There's the 200. Until we get there, and this was where a lot of guys got killed here, over here and over here. Those two green sort of single candle movements, that hurt a lot of people. But this is where the market has to get to. It's just so difficult when you've got this negative news all over the place, and it's just trade shorter time frames and remove yourself from the screen. It's like, if I'm going to trade this, I will probably come down into the 15-minute chart. The 15-minute chart for me is slightly easier to trade because there's the 200 moving average for the 15-minute. And it's a little easier to trade here, closer to this line, and here in these support boxes. Here's the trade. The easy trade is to the white zone, right? So, a break of this level here is a short, a break above this blue is a long. Here's the trade. If we can get above 397 today, tomorrow, there's the trade. It's up to 406 if we can get there.
So and we need with the shorter time frame trades, say like 15, 30 minutes, what's your average hold time? Is that an intraday?
Oh, my average hold time on trades is around 11 days.
Even off of the shorter time frame charts?
On average, look, day trades, that's inclusive of day trades. On day trades, it's always going to be 0 days. I'm going to buy in the morning, close in the afternoon.
Right. But like, let's say a 15 or like a 35, 65-minute chart, that kind of thing.
If I'm trading a 15-minute chart, I'll probably hold for 6 candles. 6 to 7 candles. It really depends. It's very difficult to determine, right? So here, there's a short, or a short trade over here. That was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 17, 18 candles. That was gotten into at the 20th of May at 11 o'clock, and we got out of at 3:30 or 3 o'clock. We got out just there on that blue candle over here. We would have exited the trade because that was the break of the short. So yeah, you would have been in that candle for 5 hours, in that trade for about 5 hours. But the key thing is, you have to have a system, right? Without a system, you fly blind. This is not about sitting in a Discord server and getting someone else's ideas. This is more about, you can tell just by visually looking at the chart what's going to happen to price. You can see that, right? So once you've got that system in place, just trade the system. If you're going to go short, go short. Know which one you're going to go short with. What put are you going to buy? How long are you going to hold it for? And then trade that plan. Here you had a short trigger. You had 1, 2, 3, 4 short triggers in a cluster. So that's how I tend to work. I don't just have one trigger. I look for multiple triggers across different kinds of setups. And when we have these clusters of setups, we know we can trade with confidence. So you could go 1 contract, 2 contract, 3 contract. You could scale in based on these 4. In fact, you had 5 signals here, including the orange bar. And then you hold it, close out there, go long, buy 1, 2. You've got 3 signals here for a bullish trade back to the 200. You could be trading this as the 21. You could add the 21 in here. And then as you get here, you take profits. That would be your target line. Take profits over here. Now you've got a short trigger. You've got 1, 2, 3. You've got 3 clusters here for a short trigger to the downside. So yesterday at 3 o'clock, it was a very difficult day to take a short position because you had this bullish move in the morning. And people were thinking, oh, there's going to be some sustainability. But our indicators, our forward-looking indicators, were already indicating that things were going to go to the short side for this morning. So we positioned to the short side. So you've just got to have a build. You've got to have confidence in your trade plan. You've got to have confidence in your system, and then you can trade it. But nothing emotional. There's very little emotion that comes into this. There's no excitement. I don't get excited when I do this. I try and maintain a degree of agnostic sort of emotions here. I don't really care whether it goes up or down. I just follow the system. I just keep following the system.
You just got to be on the right side of the movement.
Yeah, sometimes you get caught, man. Here you get this long trade and it doesn't really work. You're not going to win everything. The thing that I try and tell traders is, don't trade to be right. If you trade to be right, you'll end up holding garbage. Just get out. When it's broken, get out. As soon as you see the first signs of a break, get out. You can always come back. If you lose $100 in a trade and you put down 1,000 and you've lost 100, you've still got 900 to play with. Don't get into the habit of putting down 1,000, losing 500, trying to be right, getting out, losing 700. Now you've only got 300 to play with. Don't do that. Rather just take the 100 loss, come back, look at the system. Is it still giving you a signal that's positive? Yes. Trade a different setup, trade a different time frame, trade a different whatever. But manage your book to be profitable, not manage it to be correct. You're never going to be 100% right on every trade. And if you try and trade to that level, it's never going to work. You just have to trade to be profitable. And making $100, I think yesterday I did 3 trades where my profit was like $60. I didn't lose anything. I made $60 on all 3 of those trades, but I also did some butterflies that nailed it and so on. So my win rate yesterday was 1 loss, 5 winners, still made my goal. I moved on. I don't care about the loser. The loser doesn't bother me. It's making sure that I follow my rules and stay true. I don't want to get emotional. And that's how you can develop consistency.
Nice. Well, so it looks like we're headed down. I mean, as far as bullish trends in this market, what do you see? Like energy, I know is still holding up pretty well, and oil seems to be doing pretty well.
Yeah, let's have a look at energy. Let's have a look at XLE. So energy,
the commodities tend look okay as well.
Yeah, so energy looks good. Above the 200, let's go to the 375. So I trade the 375-minute chart because I like getting my signals just before the end of the day. We're above this resistance zone here. We're going to break back into the red zone. If we look down at the bottom, we've got momentum on the 20 going high. We've got momentum on the 5. This 5 will generate to the 10, to the 15, to the 20. This is moving in the right direction. Short-term price target here on XLE up at 88. That's where we'll take profits. And we've got that long trigger over here. Little bit of a hiccup over here, but we're still long in the trade. If we look at our trade that we are using is GUSH. Oh, sorry, GUSH, which is a double leverage, I think it is. Double leverage, yeah. So we're trading this one. We're long in this one. And you can see the break above the price vol band. Break creates a new range level up here. There's our stop level. Price target up here at about 193. Momentum to the upside. You've got these stochastics all pointing to the upside. So if you look very carefully, there's a line that's green, green, green. That's a positive trade. Has a pretty high win rate at 50% at 1.4. So we know that this can generate a fairly large move because of the type of stock that it is. What else have we got? Let's see. Let's have a look at NVIDIA's got earnings tomorrow. Let's have a look. NVIDIA, we've got a straddle on here for earnings. So we're not playing, we'll play both sides. We don't really care what direction it goes in. We'll make money on an up move and a down move. There's the 200. It's so far below. Everything looks pretty bearish when you look at the setup at the bottom. Your 15 has lost momentum to the downside. Your stochastic is red. It's fired short. Stochastic is red. This has gone blue. This one, is this going to be strong enough to convert that into a yellow? I'm not too sure. Red vol band. bearish trade. This will probably be a put side trade for earnings. This was something I added yesterday. We've got earnings today. We'll see where it lands up later on. Bullish divergent low bar, break above the price levels here, break above the resistance zone. Green, 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 green. There's the 15 has got a little bit of a weakness here on the squeeze. Not much of an issue. So I'm trading this one to the long side, looking for a move up here into that blue zone up there. Looking at some of the major stocks in the market. Let's have a look at the majors. Give me a second.
About healthcare, is there anything?
Yeah, we'll look at healthcare. So XLV. So here we seem to have found this level. So, this one looks good. Green vol band, still under the 200. So it needs to get above there. There's our bullish alert there is at the top. We're going to bring that down just a little bit now that we've got that descending 200. So we just move our levels a little bit so that if that divergent low plays out, this moves up here and we can get some squeezes forming at the bottom. This is going to move up to here. We don't want to be bullish until it gets above the 200. Here you can see the squeeze has, well, there's no squeeze, but the momentum is to the upside. It's losing momentum here on the 15, it's gaining on the 10 and losing on the 5. So it's a bit of a mixed bag. You could safely start to build something, but the key is to have a stop line, right? So your stop level should be somewhere around 130. And as this moves up, as this starts to play out, your signals will get stronger as it gets closer to that 200. Once it crosses there, that's the easy money trade. This is still vulnerable to the downside as long as we're underneath the 200. So, I'm just going to wait for it to get there. If we look over here into this watch list, everything this morning is just red. There's no green here. Let's have a look at Apple. I like Apple. I trade Apple fairly regularly on an intraday basis. There's the short trigger that we have over there that was on the 9th. Trading to the downside, red vol band above the support zone. We've got a trade that you would probably want to do here. This is the zone that you would want to do. So if this rips up, can cross above 152, unlikely. There's your trade to the 200 at 165. But any move up to here can be shorted. I think that you're still going to go down here. The 5 has got momentum, the 10 hasn't started yet, the 15 hasn't started, and the 20 still looks pretty bearish. So when you see these kinds of setups, it's very, very difficult to be bullish here. I wouldn't be calling a bottom on anything. Like, there's just no way you can do it. When you've got a break here, we've got to be above that line, 145 minimum. Ideally, you want to be above 152, because this red line is going to be like a ceiling. Price will go there and it's going to probably come back down here. So, just don't overtrade this. Don't try and force a bullish trade into something just because we have this scenario down here at the bottom. When we had this bottom here, everyone thought that movement there was the end of that down cycle. That candle there, you can see where it touched that green. Everyone thought that movement there, reversal, right? Everything's on, let's go to the upside. And what happened the next day? We got absolutely hammered. It's like getting sidearmed. You're going in to do a classic takedown and you're just getting punched in the throat or something.
Yeah.
Totally unexpected. So I just wouldn't force anything. Like, if it's not there, if the signal is saying short, go short. If it's long, go long.
Wait for confirmation as well.
Yes. Don't try to be a hero here. This is not a market for heroes. This is a market for he who lasts longest. He who lands up, keeping his account will be the one who wins. That's the way I see it. If
you gotta have money for the recovery, reversal. If you lose it all,
have money to play the reversal. Absolutely. Yeah. You can't play this game without money, right? So it's all a matter of just being careful. Don't trade what's not there. If you're watching this and you want to know more about like what confirmations look like and things like that, just put a comment in the bottom and we can cover it off in a future session. You know, sometimes that's the easiest part of trading, is actually just, you know, building the tools to help you. That's not hard. What's hard is following them, because your brain takes over. You know, you get this,
Right.
the sort of wheelhouse goes over, and, you know, you start thinking differently, and, you know, oh, what does my tool know? You know, it takes years to trust your tools. So trust your tools.
Sounds good, Chris. Well, I appreciate it. And guys, go over to Rogue Investing /alpha. Check out Chris's product over there. Get access to his webinars and get some good coaching, because this is a market where you need coaching.
Awesome. All right, my friend, take it easy. We'll see you next week.
Absolutely. Take care, Chris.
Take care, sir. Bye now.